All right, so this is going to be a Strat plus ICT review with myself, the TheStratuchiha, and you go ahead, bro.
It's your boy Faith in the Strat. What's good, y'all?
All right, so first we're gonna be looking at SPY, and with the Strat, we like to look at multi-time frames. All right, so we do multi-time frame analysis, time frame continuity. We also look at actionable signals. All right, so if I go to the month, because we need to understand what the month is doing, whether we are directional or not. So let me get rid of these broad information lines real quick. All right.
And
So
I
if
do
you
the
look at
same
the
thing,
month,
bro.
you said what, bro?
I said I do the same thing.
All right. So if you look at the month, you'll see that we're already basically a 2-2 rev in first force, and it would be a 1-2-2 rev. So we have the one, the two up, then we have the two down reversal, which if you look at your strat combination sheet, that is basically a rev strat, which is basically a 2-bar rev strat, because it's what it's going to end up doing is forming a compound 3 if it hits its targets. All right.
Yep.
So we see as long as we're below 395.04, essentially our bias should be to the downside, but we may have short-term bullish moves. All right, because price doesn't just go straight down and it doesn't just go straight up. If we go to the weekly chart, all right, for this week, we are a 3-2 continuation. All right, because this three, even though it's blue, you can see the red border if I zoom in. All right, this is basically a bearish three. All right. If I just turned off the indicator real quick, you'll see it's red. All right. So that's a bearish three. So it is a 3-2 continuation. Then if we go to the daily, all right, which the review we're doing to start off with is going to be the 9/20. All right. So September 20th. And you can see we're a red two down. All right. So one of the things that I like to do, and I don't know, Faith, if you like to do it, normally whenever I'm going into a trading day, I normally like to mark the high and low just so one, I know when we're actually directional. The biggest thing with the strat is knowing if you are directional or not. Some people say they don't like trading inside days. Some people like trading inside days. Some people won't trade it inside day, but they'll trade it inside week. But the biggest thing is really just seeing if you're directional, because if you are, you essentially can feel more comfortable about the position you take. So if you go two down and you stay in force, which would mean staying below the previous candle's low, which in this case, this candle with us looking at it, it's not in force because price action is above the previous candle's low. All right. But if it was in force, I can feel more comfortable about holding that position.
Yeah,
Uh
next same thing. I mark my day. I also do my week and month. So I'll have like lines, like random color coded lines for the high and low.
yeah, that's what made me go back to the week. I was like, oh, let me go back and mark
Yeah.
two
People always
two
like, what are
down.
those random lines? Because I'll like make mine real minimal, but I'll have them color coded. So I know like as we're coming back, we'll come down and reverse, hammer up or something on a day. I'll know like, okay, this is like the wick of the week for me.
All right, so yeah, let me color code it real quick. So we'll do for the month, I'll do orange, and then let me just mark that. So 122 rev month, and then let me just say below two down in force, below two uh two down in force, and then for the week, just do 3-2 continuation. Change it so I know the actual candle pattern. 3-2
We can set up a
continuation.
3-2-2.
Yeah, if we were to push up, but we know probably ain't happen now.
Yeah, yeah, after today.
Three down, two down,
I know a
continuation.
lot of people are looking for a triple outside week. I have to set up a lot of people as well.
I
But
mean,
that was before
Powell
this happened.
Powell speaks Friday, so uh two low, two force, and then go down to the day, and then basically our our week in that day trigger is almost like sitting on top of each other. I'll leave the day. I'll make it I'll make it white. And then let
That's
me
yeah,
actually,
my days are white too. Funny enough.
yeah, normally I have all of them white. I just mark them out and just say what the month and stuff is, like which time frame it is. We'll say two down day, uh, which would be, I think a two can actually be a two rare day. Two. All right. So boom. So now we go to, normally I mark out the 4 hour as well, just to see if we have an earlier entry. But I'm
Yeah,
just gonna go down to the hour. All right. So if I go, let me actually go down to the 15 minutes. So normally intraday, whenever I'm trading, normally, especially for other stocks outside of like looking at something like SPY, I normally focus on, I know the official strat time frames they give you for like day trading time frame continuity is day 4 hour, hour 15. But I know like when I'm intraday, I look at like hour 30,
yeah,
15, 5.
yep, yeah. Per strat, yeah, I'm using those, and then ICT, I'm going smaller.
Exactly. I mean, I use a whole bunch. I use 2 hour too, but just the
Same.
bare basics, because I mean my time frame list is long.
It's funny because the 2 hour, I didn't even realize that was an odd time frame until I told somebody one day. They're like, "You used the 2 hour?" I'm like, I thought everybody did, but I forgot when I first started stratting. I just added it one day. I got tired of waiting on the 4.
Now I just gotta find that trend line I drew initially. Uh, because I forgot which one I drew. But essentially what we're gonna be looking at is how the price action ended up moving for 920, because there's a good example that we have in here for that. And essentially it would be what strat entries would I have taken on this day right here. So essentially, one of the things that you have to keep track of, a lot of people use like this indicator, and the indicator really can force you to not know where those important levels are. So I had ended up creating an indicator, but I'm just going to it's ATR versus DTR plus SS 50%. It's best really on intraday time frames, basically hour and below.
Right.
Um, you can look up your ADR zones, what that means or whatnot. I won't go over that here because that'll take up too much time. But you also get your ATR and what it's moved so far that day, and it changes colors based off whatever parameters you set. And then you got your 50% lines that you can set to whatever time frame you want to set it to. But essentially, the reason why I turned that on is because you want to always keep track of your open of the day, which I'm going to turn that off. And then I'm just going to mark the open. So we know the open of the day for a spot for 920. All right, it's going to be 385.05. The reason why this is important is because this short opportunity you end up having here to take puts off this 2-2 rail. All right, essentially, we end up breaking, making a new hive day because this was initially the hive day before we poked down. And we essentially ran into a broadening formation that I basically drew from here to here initially on that day, just because when we initially poked up, I thought this was the bottom, but then we kind of wicked it. And then we end up going from here to here essentially. Uh, I sometimes draw multiple broad information lines just because sometimes it might not come back to here, but it might actually come back to this initial one.
I
What
do.
about you, True?
I do the exact same thing. I was gonna say, like, I'll draw them early. So especially like that red one, I would have.
Yeah.
I think it's like 11:05, or is what are we on the 15 minute? So yeah, like 11.
Yeah.
The moment it formed, I probably would have. As soon as I saw that next two down forming,
Hmm.
had connected those that high to that higher high. Because I'm big on the intraday BS that get created.
Exactly, because those are the ones that we need, especially specifically for if you're day trading. You can also use them to help you end up finding a swing trade, maybe taking it off the lows if you know it. If you basically see that it's TTOing, maybe it's already green on the week, maybe went two up. That's what the essentially the Randy Jackson is, where you have that two up, two down, then the two up, and that two down forms a hammer. A lot of times, if you can see that intraday broad information, all right, you can start to build you a swing position to swing it into the next day. And sometimes those, end up gapping up. Um, but for day trading, this is what this video is more so about, like the day trading aspect of the strat plus ICT. Obviously, my guy, the Faithinthestrat is going to get you right as far as the ICT side. Now here with the strat, essentially, you could have had an entry right here off this 2-2 reversal. Now, if we go to the hour, because that's normally where I like to start, go to the hour. Essentially, matter of fact, I'm gonna have to break it down, but essentially, you always pay attention to when you're getting your hour flips. If you have on extended hours, your hour flips are going to be different. It's going to do it at the top of the hour instead of the bottom of the hour. All
Yep.
right. So if your setups look weird or it looks different, it's probably because you have extended hours on. If you go here to where you have the settings, kind of like looking gear symbol, if you go to sessions, you can turn off extended hours. You would just click regular trading hours. That is what we like to use with the strat. We just like to focus on the regular trading hours. Otherwise, your candles for your hour is going to populate at the top of the hour instead of the bottom of the hour. And the top of the hour is your 9, 10, 11. Bottom of the hour is 9:30, 10:30, 11:30. What you got, bro?
No, I've said exactly. That's one thing, for a while I had on. I realized, but then it just got too confusing, giving different call outs where I just ended up turning mine completely off too. So,
Exactly. So essentially, whenever we get a hour flip, you always want to keep track of where that open is as well, because that can let you know if you're heading in that direction when you actually flip that time frame red. Because knowing, with these arrows, all right, that your month is red, your week is red, your day is red, your 4 hours, green. In this case, is saying the hour is green. Knowing that is cool, but knowing where you actually flip the time frames is more important because you might end up having a reversal against you if you're in a position like, dang, why this goes so hard against me? It's probably because it ended up flipping the continuity on you, but you didn't know where the continuity was going to flip. You was waiting for an indicator to tell you, oh, my hour just went red. No, you need to know what price is actually going red at. Let me see. Then if we go to the 30-minute, you see right here, we get the 30-minute flip at 11. So let me actually go back to the hour so I can keep track of these lines. And I'm gonna probably color code this different. So I'm gonna color code the hour purple, got a little light purple, boom, and I'm gonna say hour open. I'm gonna change this one to daily open. Daily open. I'm actually gonna make this blue. Boom. All right, and then we're gonna go down to the 30-minute, and then make this. I'm gonna change that color to probably orange, just because I think I might have made the monthly thing orange, but oh well. Uh, 30-minute open. All right, so now when we go to the 15-minute, all right, if we even just let's just say bar replay, let me delete to right here. If you look at it, this is the setup. So essentially, what we have is we broke the previous hive day, all right, which was at the time 385.30. We broke above it, and then we basically formed. Would you call this a shooter? I would just call this more so like a doji.
Doji. I would definitely call it a doji, but also just outside of the strat, like me knowing candlesticks and like the candlestick Bible, when I see a doji on a high or low, I'm already looking for a reversal.
Exactly. So, y'all, that's a keynote right there. Write that down.
Yep.
Repeat that for me again, bro, so
So
they
like,
know, so they can hear
outside of
you.
the strat, because I notice a lot of people they start the strat, but they don't understand how to read candles well. Like, and a big part of the strat, like like right there, that 212, it's okay, but that 212, is completely different than like a 212 off of a high or a low, or like with really big candles. So like that doji, I'm noticing is on a high and it's a higher high. So that's an indecision candle in itself, outside of it just being a two. So I'm already thinking this could be a potential reversal because we sold up, we made a significant high and low, and it came back to right near the open and close within like a penny, it looks like. So I'm always, noticing that, especially looking at that candle before where we did that much momentum for us to instantly have indecision.
All right. And then I don't have the volume on here. Sometimes for a lot of people, the volume can be noise. So
Right.
I just created this layout so I don't have volume on here. A quick tip for everyone is if you're just starting the stratter, if you're just starting the strat, what you can do is take your trend line tool, which should be, I can't remember which one it's in. Is it the second one? Yeah, here we go. It's going to be your second down. All right, take your trend line tool. You can favorite it so that way it's in your favorites. And essentially, what I do sometimes, especially if I'm multitasking, I'll draw a line, basically let me know when that 30 minute flip is coming or that hour flip is coming. So I can basically pay attention to it. All
Yeah,
right. So that can help some of y'all as far as that with just drawing that line, knowing that it's coming up. So like once you get the 11 o'clock flip, all right, then sometimes I'll do like 15 minutes before the the hour flip just so I can see what's setting up. And
yeah,
then once that comes, I'll just move it over. So I just keep wiggling it over every time. So that way I can keep over things and then also just be mindful. All right, this could be setting up for a reversal, especially if it's been going up and then it started pulling back. It might get ready to TTO. All right. So essentially we have a doji candle, which is an indecision candle, which true to strat, nah, not true to strat, faith in the strat.
nah, that's the
Oh,
that's the homie.
right. You outlined perfectly. So now when we get this new 15-minute candle, us knowing that the 30-minute open, right, is 385.70. All right. When that candle forms and we start to see the 30-minute go red, especially when we get this 2-2 reversal on the 15-minute, that can help us feel a lot more comfortable with that. And then this last 15-minute candle leads up to the hour flip, which is at 11:30. And basically, if you take the entry right here off of
Beautiful.
that 385.45, your 30-minute is red. So you're in conflict, but in that moment when it was dropping, you took that position, you broke below the open of the day. So while the hour still may have been green, because here's your hour open right here, right? Which it ends up turning it red. Um, you could have just felt better about that. So a lot of times, besides just targeting here on the 2-2 reversal, because if you look at your strat cheat sheet, which I don't have up right now, but Sarah Strat Sniper has it on YouTube, on Twitter, right? On that 2-2 rev, your first target is going to be right here. All right, this low, which let me turn the magnet back on. That low right there. And essentially, let me actually just hide this. Right, that low, that's going to be your first target on the 2-2 rev. It's always on the 2-2 rev. If you're doing a 2 up, it's the candle before the 2 up. For a 2 up, 2 down reversal, you're targeting the low. For a 2 up, for a 2 down, 2 up reversal, the first candle you're going to target is the first candle before that 2 down, right? So this would be our first target. And essentially, in the midst of targeting this, right, you would want to see how price action actually handles going through those opens, hitting the daily open, hitting the hour open. First would have been the 30-minute open, but hitting those different opens and seeing if we actually change those different continuities. Because sometimes what'll happen is we'll get the 2-2 rev, it'll hit the daily open and then bounce right back up, and then it forms a hammer. And then we get basically, which in this case, it wouldn't be a shooter counter hammer because it's a doji. But if it was a shooter, that's sometimes how you get those shooter counter hammers or just the hammer form is forming a hammer off of running into an hourly open or running into a 30-minute open, which is the basis of why we pay attention to time frame continuity. But somehow that got lost in the shuffle when we start using the actual indicators, because now a lot of people just look for that arrow to be up or down. Or basically green or red, which doesn't really paint the full story, because if we are 2 up on that hour, are we still directional? Are we in force? As well as, is it green? Those
Mhm.
are the different things we're paying attention to. You have any input on that, bro?
Oh no, I was just agreeing with you what you're saying.
Okay, so essentially, you could have got in right here as far as selecting option contracts. Normally, I personally at this time in the day, this is where I normally would have that ATR on so I can see how much we move for the day. Normally, if we're breaking at 385, I'll probably go like 384 put, if not 383 put, which is basically around the low. So it would still have the potential to be in the money, but at the same time, we're still early enough in the day that it can hit that. Whereas later in the day, I wouldn't go that far out. If we're at 385, I'd probably just go 384.
Yeah, that's
Uh,
exactly how I do it.
exactly. So great minds think alike. So off the 2-2 rev, if somebody was stratting and they took this 2-2 rev, one, they're taking it because you go below the 30-minute open, so that goes red, and then you have the daily open right there. So if you can change the daily time frame continuity, which is your higher time frame, and for day trading, that's basically the highest time frame you're basically consider outside of, if it's doing something to the week or if it's doing something to the month. When that goes red, basically that changes the bias to from bullish to bearish, as well as right here once we broke this high of day, we get this intraday broad information that is created from
Yep.
basically this two up back to this two down. Now I know this is a two down. A lot of people like to draw their two twos back to from a two up back to another two up. But if we was to like go intraday on the 5 minute candle, right? That's still a two down, but sometimes like on a 1 minute or something like that, it's still a two up. So while on a higher time frame, it might not be, and I probably could have drew from this three back to here, right? It might not necessarily be a two up on a higher time frame, but on a lower time frame, sometimes it's a two, sometimes it's a three, things of that nature. So a quick tidbit about that. Uh, so far, you got anything you want to point out, bro?
Well, I was gonna say, like, yeah, for me, I just look the moment we open, like that first candle, especially knowing the type of market we're in, where overall we're in a bear market. I'm just always marking every day almost the high, unless I expect like a really bullish day. I'm always marking like the high of the day.
Yeah.
So open, I would instantly mark that box gray. Usually I'll put like just a little small box or something for it. And then I watch as we start to, come up, hit lows and then come up and attack that high day. And I'm always watching like, okay, are we going to break it now? Once we break that high day, are we going to start to reject? And once I see it's rejecting, that's when I start creating my BF.
Okay, bet. So now what's going to end up happening is when we hit our first target. So essentially you would have just marked these different targets. So you went here, then here, because matter of fact, there, and then essentially low of day. And then you would have had the two down, um, basically breaking the previous day's low, which is where we would go two down. All right. But we see when we break that, now we're starting to form basically like another doji. If I play it out. And then we broke down below it. And then now we're starting to come back through it, essentially. Now, this is kind of where I'm going to let you take over as far as how you would do this, because I know this is more so of an ICT type setup coming up. And then we can mark out where I'll keep the daily open there. Where well actually I'm gonna let you share your screen. Mark out the actual strat entries and why it's beneficial to know both, but I would learn the strat first. So because
Definitely.
that's gonna
A
make
lot more simple.
ICT easier. It's gonna make it a lot easier. But sometimes in certain situations, the strat is gonna get you in a little bit later. And if you're especially if and this goes heavily on 0 day expirations, which I know people are gonna be like, why are you advocating for people trading 0 days? If you have a plan and you have a strategy, nobody's telling you go full port, go,
Right.
go heavy, right? This is just one of those things where you can turn a little bit into a lot of bit. All right. So like one of the things that like, let's say you were just going to do this on a 0 day on a Friday, right? Which 0 day means 0 days to expiration. It expires that day. If you have been profitable all week, and let's just say you made $1,000, right? Or you made 500 because the average person probably make between 300 to $500, right? If
Right.
you just took $100 and you bought one spot contract and it played out the way that you wanted to, you could potentially make anywhere from, if it's a good day and it's not super choppy, anywhere from like 100% to 200, 300%. Which if you were start out and you basically ended was about to end the week at 500 going into Friday, right? If you took 100 of that, so you're basically risking, I don't know what that would be, but if it was $400, it would be basically one fourth, right, of your total profit for the week. And then you basically 300% at that, right? Then that would get you another $300. So now instead of ending the week at 500, you're ending it at 800, and you basically just used your profit from during the week to do that. That's like the smarter way to do it. Nobody's saying open an account, put $1,000 in it, put $500 in a trade, a 0 day expiration. That's crazy. You know what I'm saying? Like if you're
Right.
using $1,000, you can just do 10%, which would be 100%, $100. But yeah, I'm gonna go ahead and let you.
All right, what up? It's your boy Faith. I'm taking over. I'm gonna give you a little bit of an ICT perspective. So yeah, like Ray was saying, we had took out these highs on multiple time frames, and we had kind of started coming down to BF. So with ICT, we kind of look for levels of significant highs and lows. So a lot like the strat, and we're looking for liquidity. So I had already plotted, the this lower level we call sell side liquidity from the start of the week. So down here, so us taking out the highs, we kind of expect price to reach, and then we also expect, or we don't expect necessarily, but we look for like an aggression in the move. So us coming down and us having those 30s, which those candles were obviously pretty big. Look at them. This can kind of like help us, to realize like, okay, this move is going to happen. We start to create these, especially these right here, because these would be our fair value gaps. Let me see. It got filled, so you can't see it, but we look for these gaps in between for the aggression. So me seeing that, that day obviously is a day actually, I was able to play puts from near top to the bottom, just understanding that concept. But I'm combining it with, what I know about broad informations. So we come through, and I think this little green line was my weekly level because I like to mark, my weekly opens and highs and lows. Came through, grabbed liquidity, and then off the bottom, usually what I've noticed, especially because we came close to a broad information, the the candle that touches the bottom on a micro, usually you're gonna get like a candle that looks almost like a 1-3 or a 2-3 or 2-2, and then you'll get like a few really big aggressive candles. So I noticed we touched right there, rejected, bounced, and it made this candle, this huge candle, and then once again we made a fair value gap, which to the to ICT us knowing
Hold on, bro.
momentum.
You kind of went out. What did you say?
Okay, my bad. It's my internet. My bad, my internet be tripping. There we go. Okay, yeah. So once again, we made another fair value gap right here. With us knowing ICT, we know that's aggression and like an imbalance in the market, which lines up because this liquidity, to ICT, to the strat, it just lows. And we know to be true when we take out, highs and lows, we kind of expect a reversal and we expect us to come back through the other side of the range. So like for me, a lot of my entries just ICT based, but my overall, bias and higher time frame is still the strat. Like Ray was saying, especially with TC, understanding the time frames. So you were using that indicator, which I like. Me, what I do like for the day and stuff, like when I'm checking the levels, a lot of times I just have the TC box on. So I don't know if you've seen that one, but it kind of just
Yeah.
shows me continuity, and I'll literally just be watching these as I'm trading to see when the hours flipping in the day, and then I'll zoom out. So
Okay.
that'll definitely help me a lot. So you want to talk about the Fed day today?
Yeah. So I was gonna have you look at 920 again. So like, what made it shift for you to even look at ICT?
What
Uh,
made me shift to ICT?
no, as far as like on 920, what would have made you shift? Think about it shifting back up to the upside. Like what specific
Oh yeah,
setup?
yeah, yeah. Okay, yeah, yeah. So like I said, it was really just me seeing that we've already taken out these lows, which is a level of liquidity for ICT, and then
Right.
outside, and this was like because there's like internal and external liquidity. This would be like the external range technically.
Right.
Outside of that, I'm starting to see a shift in market structure. So I'm starting to see like these highs are lower, 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 and lower lows until
Right.
we make a high that breaks the lower high. And we look usually for an aggressive reach. So like I bet you if I went down to like a 3, you can
Mm-hmm.
see usually aggressive reach over that high. They call that like the displacement level.
Right.
So me seeing that, instantly made me bullish. And then especially off this bottom, when I saw this 1 minute candle, like right here, you see how significant this gap is.
Yeah.
That alone could tell me, paired it with, a volume spike, which shout out to Alex Options. He's one who I had first seen that, with. I use that a lot, which kind of weird. Kind of like ICT doesn't really believe in like buyers volume or retail volume, but
Right.
I'm the type, I'm not gonna argue, but if I see it on the chart and it works, I'm gonna take it. So
All right, so show me, can you mark out for me where you saw the market structure shift?
yeah,
What highs that were taken out for you to believe that there was a structure shift?
perfect. So this would be the normal, like these are just lower highs that we're coming down off of, obviously. Lower high, and another lower high. And we hit a low. So right here, there's another lower high here. I'm not gonna draw it. Once I noticed we hit this bottom, like I said, this whole area was below that liquidity zone
All
that I
right.
showed you. That already, regardless, has me in my mind thinking like, hey, this area, is an area that we can see a reversal because I know price, it tends to, move from balance to imbalance. So we imbalanced ourselves to the sell side, and then usually we'll try and balance ourselves out, which it kind of looks like happened here for a short time period before we reverse. So I'm seeing lower high, lower lows until this high was technically higher than this last high. These highs right here, we broke this lower high. So this alone would have, started giving me like, okay, we're starting to get a small shift. So then I noticed this high is actually, higher than the last few. See that?
Right.
So then we have a breakdown. This right here would have gave me, so technically like this high and low right here, when we process this would be like to ICT or Forex people, they would just call this like our small break in structure right here because we're in an uptrend and then we pull back. So I would mark that. We pull back into this area again, and then once I saw this like this low, now I'm noticing is my low. My last two lows are actually higher as well. So this low, this is the lowest low. This low is higher. This low is much higher. This is a small pullback into that area, but the low is still higher than this low.
Do you think that would have shaken out some people who probably might have gotten ICT,
Oh yeah,
who would
definitely.
have
If you're
felt
new,
like they got it wrong?
yeah, yeah. If you're newer for sure, but like realistically, you would know like if you're following the basis, you really weren't supposed to enter on this first touch right here, in my
Mhm.
opinion, because we came down and we didn't break this high with much displacement yet.
What
And
about right there when it actually does break?
right here,
No, no, no. Over,
this one,
right there.
this
Yeah.
one is cool in my opinion, but it would be like just me knowing what I know, I would have been like, this is like too early of an entry. Now, this fair value gap, I'm not gonna lie. If I saw this FEG, I probably, looking back, I probably would have got in.
What
But
about the fair value gap below it? Because there's kind of like one down there,
oh, this little baby
but
one.
yeah, where it wicks back to the left. All right, so you see how that green two down candle that starts that up move into that MSS
Yeah,
right there?
yep, the small
See,
baby FVG.
yeah, the one that you were just on.
Yeah, I don't
Right.
think this one. I don't think I would have
No,
really
not that one. It that candle, go over.
this one.
No, no, go to the right.
Oh, to the right. Yeah.
Not that one. Hang over on that bottom hammer candle. It's a three. That three right there.
Mm-hmm.
Look to the left. There's a fair value gap it touched.
This red candle.
No, 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 no. That green candle. All right. Hover your mouse over. Scroll down. Lower your mouse a little bit. Now look to your left. Hold your mouse right there. Look to the left.
Oh yeah, yeah, yeah. Okay, I see it now. I see it now. This FVG, right?
Yeah.
Okay. Yeah, I wouldn't have took this because I would have technically. I mean, this one you could, but I didn't see a shift in structure yet. This is just lower lows, and then boom, now we're coming. So this would have been the first move that shifted structure. So I would have waited because usually you wait for the shift of structure, like a break of structure, a market structure shift, and like one of these break of structures with a fair value gap. So there's like a few steps. And outside of that, just me from experience, I would have known like the first touch into the liquidity usually isn't going to cause anything. Just like with BFs, usually the very first touch on a minute time frame isn't going to cause a bounce. So I've been waiting to see, a touch and a little consolidation here, like we did. you know.
Yeah, because I could see where some newer ICT people get that
Oh yeah,
misconstrued. But on the, I think if you go up to like the 3 minute, you don't even see that. On the
exactly.
3 minute, it's no
Yep.
structure break
Yep.
uh,
And that
until it dips all the way back.
right. And that's another thing, you know, I mean, it kind of takes getting used to, but like sometimes we'll be on the one so much and we won't notice, you know, what's happening on the three. So like I'll always, right before I do my entry on the one, I'll keep going back and forth to the three to like make sure, because like you said, on the three, we might not even have that. So, but like here was perfect because we had, I mean, technically here was cool, but we had this, but here we had an aggressive move down and up, which is kind of like what you want to look for.
Yeah, because to me, it looked like it probably shorted the people who chased that
Exactly.
top thinking that it was going to keep going.
Yep, and that's why you want to look for that aggressive move down and up because, like I said, it's pretty much stopping out and grabbing people on both sides. People getting getting triggered short in and getting stopped out. Once I saw this FVG though, usually you're gonna expect a push, and then that's where you kind of expect to pull back into it, and that'll be a good entry. So that alone, could have got you. Keep in mind this is end of the day though. This is like $2 on the spot. That's not bad, especially on SPX. That's a hell of a move at the end of the day because the contracts depreciate so much. So it's kind of like you take advantage.
So can you mark out your what would have been your entry or the ICT entry? And then let's look at where, we would have entered based off of the strat.
Perfect. So yeah, we could have right here would have been like displacement over these highs.
Hmm.
Me, usually I try and just get an entry into the FVG. They call it like an OTE, like your optimal trade entry. And usually you can use a Fibonacci off of the highs and like
Hmm.
pull it down like this to the lows or vice versa. But I didn't see like here, I wouldn't see a clean one. So sometimes I'm not gonna lie, I'll enter and it's not the cleanest entry. Like right here, if I didn't see a clean entry or a clean pullback, like a TTO, I might
Yeah.
have waited, until I see it's like coming out of it. Because sometimes I'll see pokes out of it. Like we'll touch it a few times, and then here we're poking out of it. Like I probably wouldn't have got in just being safe and just knowing I'm playing contracts like here. Now, if you're playing futures and you get the first entry and it's clean, it's cool because you can sit through that drawdown. But with us with options, my safer probably entry wouldn't have been until I saw, a stronger move. So like somewhere like here.
Okay. So you wouldn't have took it off the bottom then.
Me personally, no.
So when it pulled back right there,
Oh, go ahead.
when it made that higher low right there, you wouldn't have entered when it pulled back into that fair value gap.
This one, yeah, this is a cool entry, but obviously we're looking hindsight because, like, yeah, this I would have probably ended up getting in, but then obviously we see the pullback right here.
No, that's what I'm saying. So when it pulls back, there's a fair value gap down there to the
Where
left, to the left, right there, right up in there. Not there, but to your right a little bit. So you see right there on that candle that you're hovering over.
yeah, yeah, yeah. Okay, yeah, yeah, yeah.
So
No,
that fair value gap that if you to the right, it reached back into. Because technically,
oh,
right, if I'm
actually, right there, yeah, that could have been your
no, not off that one, all the way to the right. Because to me, it looks like
this
the
one.
goal of the goal of it was to break up because that's where you get your actual market structure shift. Then if you do it from that low, from that red two down to that green two up, that falls like right within that OTE entry, I think.
Yeah, no, that's actually a good one. I think what's throwing me off is just seeing this significant pullback. But no, that would be a good one because this old FVG, technically, like I said, we're just touching into it. It's not really fully mitigated. So
Right.
it could have
And
been.
then it has that, basically what would that be? Sell side liquidity off that green three. So
Mhm.
when it broke below it, it stopped those people out who tried to take that pop up trying to chase.
Yep.
And then they get some more orders in there. And
Yeah.
that's probably why it might have been a volume spike right there.
Yep.
Because they got those orders filled.
Yep. And that's something that even Alex talked about this video, like people who kind of get faked out here who are like short, you know, are getting killed. So then they come back and a lot of these people are actually like covering, which makes sense because they were underwater right here. So they're like trying to cover and close out their puts,
Right.
even more spikes. So
Because I think for a strat, I think probably some people would probably do it off like the 5, looking at the 5, 15, and the 30.
Right.
Um,
See at the
I
five.
don't think the entry would have been until like maybe right in the middle of that FPG. So right there on the BTO, that's probably where some people would have took that 2-2
Yeah.
rail.
Yep.
So that's the first entry. So technically, if I'm not wrong about the ICT entry, the ICT entry is in the purple box. The
Yep.
straight entry is at the BTO, at least the first one on the 5 minute. If we
Yes.
go to the 15 minute, what would that be?
On the 15, this would be 15 will be up here, 2-2-15.
Right.
Strat, if you were doing a strat entry.
So then we get the 2-2. Also, if you hover over those candles, we also got to break down where was the hour flip and where was the 30-minute flip in there?
Let's see.
Because where did the move start?
So we got the 2 hour open right here. So let me mark that. $30.
Looks like that's about the same, somewhat.
Yeah.
The 30 goes.
And the 30 were the same.
What if they counted before like that first 30? Uh, it looks like we probably get a 30-minute flip at the lows.
Yeah.
You hover over those areas. Where was
So
it?
we
So let's
got
see.
11.
Yeah, so the start of that move where the pump fake happened, that was the start of the 30. If you go back to the left.
Oh, yeah, right here.
No, that's the hour. So if you go back a little bit more, like what? Yeah, see right there at the low, that 2-2 rail, that's the start
Yeah.
of the 30-minute.
So I marked that.
If you actually mark the open. So you probably have to mark the open of that candle.
There we go.
So that's where 381.40 above that, the 30 is green. Obviously, for a lot of people, price retraces back so much, they probably get stopped out. Or they more than likely probably never take the trade. But
Right.
that's where the new 30 happens at. And then we get the pull back. You kind of want to see that first higher low get put in, or that first lower high get put in first, and then get in, which is probably why some people would have got in off that 2-2 rail. But just off of ICT, the entry would have just been a little bit different. If you're trading 0 days and you're trading SPX, that could be a difference of like 50 cents to $1
Yeah.
to $1.50, which can be the difference between 300% and 700%.
Yeah. The smallest ticks. I mean, I've literally just from, catching just 10, getting lucky sometimes where like I had an entry a few weeks ago where it technically wasn't an ICT entry, but I saw the last 10 minutes, I just saw aggression. And I took the first green minute candle that was like this because I saw the second one was forming and we formed like parallel to the close. And the wick was like that, like for a second. So I just took it like, hey, I see a buying aggression. And just like 10 minutes, so 10 single 1 minute bars had those contracts up like 600, 700% because the contracts get so cheap in the day.
Man, that's crazy.
Yeah. But like that's super, risky and you got to be experienced. And like Ray was saying, like you shouldn't be a beginner, especially you shouldn't definitely be putting like your whole account or something like that because that's a
What are like
high risk, high reward play.
exactly what for you? What ICT videos like really helped you out?
I feel like 2, 3, and I think it was either 4 or 5. I was actually rewatching 4 last night, and then 10. 10. But 2 and 3, I'll just watch those because those are the beginning ones. And then I think it was between 4 or 5. One of them was like an 8 minute one. That one I was watching over, and there's actually a few. So like I watched a lot off of the I think it was like the 2016 market maker. That those have helped me like where he's talking about just the micro time frame and the micro structures. It's I think it's called like Intro to Micro Structure, but it's a part 1 and 2. I think those it's like an 8 series playlist have helped me the most because he kind of just talks about like what's happening on the 1 minute and how or smaller, how like the levels are so precise, how it can't really be noise because that's how kind of like we think of the 1 minute like a strategy.
Yeah.
But it's like how could it be noise if the numbers are precise to the penny?
Yeah, and I think that's more so for like futures. They're precise to the penny because it's like you can only land on so many things. It's
Right.
like it's usually like 37, 89, 25, or 37, 80, 80, 975. Like it's always like 0.25, 0.25, stuff
Yeah.
like that.
Yeah.
So
Yeah. I just think
uh
it's like the closes, like opens and closes being, equal, or like us touching levels of liquidity and instantly seeing like an aggressive move up, like how they call it.
that so I say for the people at home, man, if y'all want to see more videos like this, like, subscribe, tell us how y'all like the video. Make sure y'all follow him on Twitter. Make sure y'all follow me. We'll have all that in the descriptions and also in the comment section. That way we can see what would y'all like to see and hear from two different people that both are stratters, but obviously, Faith in the Strat has been doing ICT longer than I have. I be on and off with it. So yeah,
Right.
definitely y'all can look
That
forward to
sale
more
model you said
content.
was fire though. I'm not gonna lie. I was like, damn, I need to see that for me.
Oh yeah, yeah, yeah. I probably might. We probably might actually go over that maybe next in the next
Yeah.
video, stuff like that. So for sure, go give a couple examples.
Yeah,
All right.
definitely. Definitely.
Yeah. So y'all get part two. We're gonna do maybe 4 parts. Guarantee we'll see. We got to get them likes up. Let's say
Yeah.
get like 500 to 1,000 likes. Y'all see part two on his channel. Y'all are watching part one on my channel, the
Yep.
TheStratuchiha.
'Cause
So
I know y'all gonna want to review this day. I'm not even gonna show y'all too much, but we already know what happened today. I know, especially ICT wise, there was a lot of things that happened that could have helped y'all played it very, very well. So,
all right. So next video, y'all.
all right, y'all.